Evan and Ted, thank you guys so much for being here with us today. First time actually being in the community on a call. So really excited about that.
Well, yeah, thanks, Derek, for inviting us. We're looking forward to this event and looking forward to really just helping to educate your community on the importance of the finance function, especially in government contracting, and making sure that there's a clear understanding of the compliance requirements.
Absolutely, and I'm sure you'll be able to tell us every single thing that we would ever need to know in like 30 minutes. It's going to be amazing. It's going to be great. No, I certainly won't put that sort of pressure on you, but we did have a couple questions submitted from our community students, which is great. We'll just kind of save those for the end is what I'm thinking, because I selfishly have a few bullet points and a few questions to kind of help tee you guys up with to help get us started, if that sounds good to you.
That's great.
Cool. So since everybody's coming from a bit of a different background and also different business size and however many months or years they've been in GovCon, all of us are small GovCons, but certainly the stage of the business is pretty important. So maybe we could just kick it off with speaking a little bit more about how small GovCons can benefit from learning this compliance and accounting stuff at the very early stage, which is where many are at, to prepare them as they maybe win more contracts over time and grow into something like this where it becomes increasingly important. Maybe we could start there.
Yeah. So, I think ultimately, you're starting into government contracting for a reason, and you're looking to grow an organization. You're looking to grow your income. You're looking to really build a business. And at the end of the day, to grow in government contracting, there's an extra wheel that's spinning. So most companies have to deal with financial reporting, you have to deal with management reporting, you have to deal with tax reporting. Like those are just standard types of activities that you have to manage from a financial perspective. But for a government contractor, you really need to deal with the compliance side of the house. It's an extra wheel that's spinning, and that compliance is all based on the FARs, the Federal Acquisition Regulations, and it puts the onus. And really, the way I would describe it is, it requires that government contractors follow best practices for accounting, and that's in a nutshell is what they're saying. And so they've, over the years, have refined the FARs to indicate, all right, if companies follow this best practice, we know they have a high probability of having good information, making better decisions, and being around to support a 5-year contract, because the government goes through a very expensive procurement process, which Derek's going to help you with and prepare you for. And at the end of the day, it costs a lot of money to go through that process, and they don't want you not to have the financial resources to be able to support that contract for the next 5 years. So that's what they like to do. They're going to spend time on it, but they want to have a company that can be around and support that contract. And so they need to have confidence in the contractors that they sign up, that they're going to be there for 5 years. And they need to know that you have the financial capability. That's one area that we can help, because you need to be able to have the ability. You might need a letter from a bank or a financial institution saying that you can fund your receivables from the government. Now they're a lot better now than they were 10 years ago as far as making payments. They do accelerate payments for small business, and they're required to do that. But at the end of the day, it's if you're a subcontractor, you might have to wait for your prime contractor to get paid, and all of these things result in there's a need for cash to fund the operation. That's the first thing. The second thing is the ability to understand how to price fairly for the government. The government is not always looking for the lowest cost. Sometimes they do have, low cost contracts, but they want to make sure it's fairly priced. They want They don't want contracts to be priced below what the costs are because they know you will not be able to sustain that. And so they don't want contract manipulation where you have one contract where you bid on below costs, and other contracts you bid above costs once you're in the door. So at the end of the day, they want to understand what the costs are for contracts so they can ensure that they are being charged a fair amount and that you're being compensated fairly so that you'll be there for the 5 years to support the contract. So these are all the reasons that why a early stage GovCon should practice or learn best practices in finance and accounting, because at the end of the day, you want to practice like you play. And if you want to, you want to grow into a large organization, you want to start off on the right foot and you want to project confidence with the contracting officers. That's why they're going to pick you. If they don't have confidence that you're going to be around for 5 years, and if you don't understand the lingo, the financial lingo, and if you're not presenting information in a way that they're used to seeing, they're going to lose confidence in you as an organization that you will be around for 5 years to support them. So, you can certainly win contracts, small contracts, without a full DCA compliant back office. And we don't recommend that you, in the early days, invest in full compliance. We recommend that the compliance should scale up as you're growing, but it should start on day one so that you're beginning to build the financial discipline that you need to be successful as a contractor.
Perfect. I think that's an incredible wide net that ties this exact question together. Thank you for that, Ted. And I think a good follow-up question to that as well, to just really put some specifics to this that I think everybody, with their butts in their seats right now, watching and listening to this, is to just get a little bit more grainy with it. So anybody who's doing pricing, for example, to take the example of pricing, and we may call it expense allocation, but for them, it's like, well, these are the things I got to account for, right? It's like just very, very basic terminology. It's what they know they got to do. They got to build in the profit. And aside from that, they got to take up for all of their direct and indirect expenses just to get the wheels turning. And some people may be familiar with this, but my guess is even at this basic level, many have not gotten exposed to this type of terminology. So when it comes to expense allocations, pricing, really getting grainy with what you just said, we can throw out terms like G&A, overhead, direct cost, indirect cost. These are things that everybody should learn as part of the language of pricing for government contracts if they're going to build and grow into a pricing strategy within compliance, because compliance doesn't exist outside of having these. They go hand in hand. Would you be willing to just talk on a little bit, maybe examples of G&A, overhead, what can direct and indirect costs look like, just to get the wheels turning on a very layman's terms type vocabulary approach?
Yep. Yeah, absolutely. And I'll keep it high level. And we do, have a training that I know you've offered to your community members that goes into the details. That's part of what you would find in our community. So I won't get into all the weeds on this, but at the end of the day, there's two types of costs in government contracting. There's direct costs and indirect costs. And the direct costs are attributable specifically to a contract. And so that could be, goods that you're reselling, or it could be labor that you're performing. And we'll get into how do you allocate costs? That's all. We go into that actually, in the community. But the labor and the direct expenses and the ODCs, other direct expenses like travel expenses that are directly attributable to a contract, are direct costs. And it's really critical that those costs all be associated with a project, meaning the contract. So when you're keeping track of those costs, that they are attributable to that contract, or project within the accounting software. Indirect costs are all the costs that are not attributable to a specific contract, but they are in support of the entire operation and or multiple contracts. So you have three main categories. There are more, but there's three main ones that we'll talk about today. So the first is fringe benefits. So fringe benefits are, all the expenses that you pay to your employees in support of their, for their benefit, which includes things like health insurance, any other types of employee insurances, PTO, any time off needs to be charged to the fringe pool. And so that fringe benefits are all pooled into what's called a fringe pool. The other is going to be overhead, and those are expenses that are not necessarily attributable to one contract. So it could be your office rent, so IT, and other types of support activities that might be attributable to multiple contracts. And then lastly, you have G&A, which is really more of the general and administrative expenses. And then those expenses include like salaries for the CEO, legal fees, any type of like HR type of expenses. Those are just administrative types of expenses. Now, there's one other category which I would say is not. It's not really considered a pool, but it's considered a category of expense, which is unallowable expenses. So these are expenses that are not allowed to be charged to the government. So the first, one that is the easy one is alcohol. Can't charge alcohol to the government. And then there's all sorts of different, there's a whole laundry list of expenses that are not allowable, including like interest and excessive compensation. So you can't pay the CEO $1 million on a $2 million company and then charge that all to the government. That's not going to be allowable.
Love it. Couple things, because I'm taking notes and writing things as you're saying, and also to circle back from the first question, fair and reasonable pricing needs to be, but also balanced pricing is something that I'm sure is a whole other dimension, right, Ted? Because when you're looking at option years, if some companies want to like backload contracts where they come in really cheap on the first year, but then that's unbalanced pricing, right? Or if they're not taking into account for pricing escalations, things like this 2, 3, 4% to keep up with inflation, right? These are all things from the first point that are really, really, really important. And then to what you're just speaking to, wage terminations, for example, are a good place to go to find fringe, for example, right? We could see Davis-Bacon or the Service Contract Act. They're letting you know the period of time for PTO, health and welfare. These are, I'm speaking the language right here, Ted, like these are all things for our contractors here when it comes down to actually looking at solicitations and forms to get this information for the bids they're trying to put together and price. In part, this is where they're actually finding this exact information that you're hitting on. Would you agree?
Oh, yeah. So there are lots of sources to determine the reasonableness of certain costs, and there's regulations that surround those as well. If you go to the example of compensation, there are compensation surveys that are done that are utilized by government contractors in pricing just to ensure that you have reasonable rates and that those rates are supportable by the market. And again, while the government may, the cost is one factor that the government looks at. It's not the only factor in a proposal, and the government is not always looking. You need to cover all of the other bases before price becomes an issue. But if the price in and of itself is the lowest and it's not reasonable and it's not supported by market rates, they're not going to believe that you're going to be able to support the activity for that 5-year period, and the odds of winning that contract is going to be lower. And so the ability for you to support your pricing with market-based rates is going to be critical. Now, the efficiency of how you run your operation is a competitive advantage, and that's something that can be supported. And how do you structure your rates to become cost efficient, cost effective, and making sure you're incorporating inflation into your proposal, so they know that you're going to be able to support the contract in the 5th year, and that you're not going to be generating a loss in that last year because you don't have inflation built into your rates.
Exactly. I have a selfish question that just came to me that I know everybody listening is going to be curious what your answer is too. And it's not a black or white question. I'm just curious what your thoughts are on this. When a small government contractor bids on a contract that they think that their pricing is fairly competitive, but then they see it be awarded for a number that seems so low, or they're like, how in the heck is a company going to perform? And then we know that they won't be able to perform. And I often get the advice of like, don't be jealous of bad business because they're probably going to default on it. What are your thoughts on that? What comes to mind? I'm sure you know what I'm talking about.
Yeah, it's all sorts of different things could be happening there. And again, at the end of the day, like our expertise is in allowing you to create a pricing model and mechanism that can generate a reasonable profit and return for an organization. What's happening behind closed doors with contracting officers, sometimes that's beyond our scope. And so we have seen situations like this, of course, and we have seen any type of petitions go in that have resulted in contracts being reversed, and that's something that can happen in either direction. Sometimes if you're the incumbent, what we see sometimes is an incumbent loses to a new entrant, to an agency or to the market, and they're going to protest the award, and sometimes they know they're going to lose, but they protest to get 3 or 6 more months out of the engagement, and it delays the transition. I mean, the government's aware that this is happening, and sometimes they'll end the protest quickly, and sometimes it does drag out. And again, why that happens, there's all sorts of different reasons. I'm not going to pretend to answer the reasons why that does happen, but there's certainly what our job is to empower our clients to make better decisions on pricing, so that they can be more competitive, but also be profitable in the end. And so you don't want to win the engagement and then lose the war by not having any profit at the end of the contract. So you want to be able to balance those two things, and I think that's really what good pricing and cost. Being able to have an expert like yourself on the pricing, and then have an expert like us on the cost side of it, and really be able to balance those two things is really a competitive advantage for a company.
Well said. Well said. As was mentioned, when it came to the direct costs, indirect costs, unallowable costs, these sorts of things, guys, there's an entire, I think it's 45-minute training that they created for just our community. So if anybody hasn't gone through it yet, I just put the link in the chat. If this is sending some fireworks off in your head saying, I really need to know this stuff, this is really, really important. That's as much as we will dive into it in this particular call. but definitely check out the training. And again, the link is in the chat. And for those watching on the replay on YouTube, I will also make that link available to you down below this video in the description. So definitely check that out. So Ted, let's make things a little bit more exciting and spicy here. You, Evan, and your extended team hosted a webinar on Friday, which I was in attendance for, and I mentioned at the beginning of this call, which I think was very valuable. What's one or 2 points? What's a main takeaway? And again, for anybody who missed it at the beginning, surviving the first 100 days of the new administration, because there's a lot of things that are kind of being affected and bumped around. Really important stuff and very timely. Is there 1 or 2 things or a main takeaway that you could share with our community from that?
Yeah, I mean, I think the key thing here is if you have contracts right now, is to really stay in touch with your contracting officer, have conversations with them about what impact do they anticipate in their agency on your contract, and really to get ahead of it and really maintain that relationship and the communication. Now, we've heard stories in some cases where the communication was cut off and they're not allowed to talk. And that's usually when there's maybe more dramatic things happening in a specific agency. And this could be rotating, meaning they may have identified, the top couple few agencies to address currently. And that, this could still continue to evolve here over the first 100+ days. But at the end of the day, is maintaining relationships with your contracting officer, I think, is critical in getting information, monitoring what's coming out from those agencies. Second is to really stay agile. So, it really doesn't matter what our politics are, and the way I look at it from this perspective. There's a new administration coming in, and whatever your politics are, we have a new administration that comes in at least every 4 to 8 years, right? And so, at the end of the day, it doesn't matter whether it's your party or it's not your party. You got to be in tune with the priorities of the new administration. So that means some level of agility. And so, we talk about in our presentation, the America First Trump agenda, and we put out some ideas on where we would see funds flowing towards, and I think we also talk a little bit about where funds are flowing from, and that presentation is recorded and it's in the community, and anyone who goes for the other presentation that we did on costing and accounting, it's available within that same community. So you could go and watch more details about it there. If you do get any type of verbal notice, if you get verbal notice and or written notice about a stop work order, termination, suspension, whatever the terminology is, it's critical that you review your contracts for what the requirements are from the government side in order to give you notice. In most cases, you're going to be entitled to transitional costs. So it's going to be really important that you start tracking costs immediately for any downtime that you're experiencing while this transition is occurring. And that's another good reason to have a proper costing system in place on your accounting. Is if you have a proper costing system, then you set up the charge codes, you should be able to track costs to bill back to the government for any type of stop work order or transition. And a lot of times you're not allowed to bill for profit except for work that's already been completed. And so you can't just bill what you would have charged them. It's got to have to come down to actual costs incurred. So those are some of the things that we talked about again in the presentation. I think it's really the relationship things important, and really just start to review your your marketing materials, your website, and ensure that the information that you're putting out there, about yourself is consistent with, what the new executive orders are and the new priorities are for the new administration.
Great. Thank you so much for that, Ted. I think we could just swing it over to a couple of questions, and then maybe if you have an extra minute or two, if we have any questions from anybody live here with us. We had a couple of pre-submitted questions. I think one of them you may have already answered, though. We'll start with that one. But if anybody who's live on right now, if you do have a question, put that in the chat, and maybe we can squeeze that in at the end, and then we can talk a little bit more about the community at the end of this as well. That's very important, and then we can kind of wrap it up there for the remaining agenda. So we go to the first pre-submitted question, which I think was mostly answered, but I still want to ask it. So Nia stated, I would like to know, what should the foundation of your accounting compliance be? What steps do you take to ensure that your accounting system meets requirements for compliance and that your costs proposals accurately reflect allowable costs? I think you already touched on a lot of this, but if there's anything additional you wanted to add, feel free. If not, I know that you're touching on that answer as well in the training that you have too.
Yep. So I think one of the core foundational items that you have is going to be your time tracking. And so, ideally you have a DCAA compliant time tracking system, which really just goes to making sure that people are recording time daily, making sure that any type of adjustments to time records are documented, and making sure you have approvals by their supervisors of time records. There's all sorts of requirements that occur that are required from a DCAA perspective, but making sure you have that in place, and then making sure that there's a proper cost structure, a labor distribution that occurs, so that the time being tracked is being charged to the appropriate activity. So that activity could be a specific contract, it could be a G&A activity, or it could be time off. Whatever that activity is, should be charged to that, and then you do a total cost accounting for that labor, and that's spread out. And that is, I would say, one of the core tenets. And then, of course, the other piece is, again, making sure all of your direct costs are charged to the contract. There's connection from the GL to the project cost accounting, and then that you have indirect pools that are set up to track your overhead, your fringe benefits, and your G&A, and that you've separated out unallowables. And so that when, if an auditor were to look at your books, they can see, oh, they've separated out these unallowable expenses. That tells me that they're at least thinking about it. We might dig into the details, but if you don't have any allowable expenses on your books, that giving them the impression that you haven't thought about it, and we have a compliance issue right out of the gate. So I would say those are some of the basic tenets. Obviously, there's a lot more to that. Generally speaking, we follow the DCAA 1408 audit program when we do a system review, and we do that for a lot of our clients. And then if you're going after a larger proposal, or even a mid-sized proposal, and you don't have a DCAA approved system, you can actually request what's called a letter of adequacy from an independent accounting firm that can be utilized as that entry point into that next level of contracts for yourself.
Great, thank you very much. And then I think Lloyd also had just kind of a two-part question, and then it looks like Roberta has a question. So just let me know how you are on time. If we need to wrap up or whatever, we can do that. But Lloyd asked a two-part question. The first one, is it wise as an LLC to place yourself on payroll? This may be more of like a tax question, so let me know if this is not a question that would be a fit. But is it wise to place yourself on payroll as an LLC and issue yourself a W-2, or should you take regular draws, pay the IRS quarterly payments to keep your tax liability reasonable? So I think it's more of a tax question. I don't know if that's something you could weigh in on or not, or if you feel comfortable doing it.
Yeah, I mean, I think that's a kind of part legal, part tax, part GovCon. So I'd say that the bottom line is we can cover all three of those areas, meaning we're not a law firm, but we understand the LLC structure. And I would say the key attribute of an LLC structure is that you have the ability, and why so many companies like to be LLCs now, and people recommend it, is that you have the ability to be taxed as anything. If you're a single member LLC, you're a disregarded entity, so that you're taxed at Schedule C. If you're if you have multiple members of the LLC, you can be taxed as a partnership. You have the ability to be classified as an S corp as well. You can classify the LLC as a corporate entity, and then you can take the S corp election. So you could be classified as a C corp or an S corp. So the tax implications of all of those are actually need to be decided once you've decided which one of those you want to be. So each one of those has a different answer to this question, but you really need to understand, like, where do you want to be in that whole thing. So as an S corp, there are some benefits from a compensation perspective where you can pay yourself a reasonable comp. You're going to get your Social Security taken out of that and Medicare taken out of that compensation. But then any profit above and beyond that is not going to be taxed for those purposes. So you end up saving some Social Security and Medicare taxes on that. Now, at the same time, if you have cost plus contracts, you have the incentive of inflating your compensation, but there's reasonable comp tests you have to go through for that as well. And a lot of times the IRS is also onto this artificially low comp on the W-2 for an S corp. And so they're going to want to make sure, based on your profit level, that you're taking a reasonable comp based on your revenue and profit. So all those things are looked at. At the end of the day, we have some good rules of thumb that we can utilize based on your specific situation to make sure that you don't that you can balance the tax savings there and with the actual cost reimbursement and costing implications of adjusting your comp as well. So, having a tax accountant that really understands the ins and outs of government contracting is important to make sure you get that question right for this year, but also long-term for the organization as you grow.
Thank you. And I believe the follow-up to that was actually regarding certified payroll. So I actually think it's actually just an entirely different question. But just how the flow down works for certified payroll. Is it something that subcontractors provide, the prime provides? My understanding is that we see this quite often with construction contracts where it's really, really important to make sure, it's always important, of course, to make sure fringe and these additional benefits are being paid, but it seems to be scrutinized a lot more on the construction front, along with the Davis-Bacon Act. And then it's also my understanding that it's a responsibility to work with any subcontractors to provide that, but it is ultimately the responsibility of the prime contractor to provide that to contracting. Correct me if I'm wrong, or fill in any gaps that I'm missing here.
Yeah, again, if there is a flow down provision that requires certified payrolls, that would be in your contract. So just make sure you refer to your contract. And there are multiple ways to, I would say, comply with Bacon Act. And so you just want to make sure that you're examining the different alternatives so you can pick a path. Obviously, there's ways of providing benefits to comply with that. There's also ways of providing actual additional compensation associated with that. And, that's something that you have to go through the numbers for your specific situation.
Perfect. And then our final question came from Roberta, who is live on with us right now. Hi, Roberta. Always asks great questions. So she said, thank you, Ted, because, and maybe you can see it in the chat, I'm not sure, but thank you, Ted, because some of us are only using subcontractors, how do we ensure best practice reporting required to meet the government's compliance needs are communicated and monitored and delivered from the subcontracting community? And if any context is needed for that question, Roberta can certainly expand on that too. I'm sure she'd be more than happy to.
So if I'm understanding what you're saying is that you don't have employees, you just have subcontractors. Okay, so from that perspective, the question is, how do we ensure best practices reporting, government compliance needs are communicated and monitored and delivered from the subcontractor community? So I'm not sure exactly what that question first. Maybe
I can add in here, but I'm in a noisy area. I'm so sorry. Can you hear me?
Yep.
Okay. Yeah. So I'm not self-performing. I'm not self-performing. I'm leaning on the subcontracting community. But because you mentioned compliance is such a big part, right, of the government contracting world, I think I know as a small business what my responsibility is as a prime contractor to meet that. But if it does flow down to the subcontracting community, then what?
So what that means is that you need to monitor your subcontractors to ensure that they're complying in any provisions that are required to flow down to them.
So then whatever type of documentation I get, let's say it is their certified payroll, right? That confirms that they're paying what they say they're going to pay under the wage determination. I understand. I can ask for that, monitor it, and demand it as part of compliance reporting. And how often does the government ask for that? And that's where I have no experience. Derek will probably chime in here too. Yeah.
Yeah. What I would say is that there's no guarantee that the government will ever ask for it or that they won't. It really comes down to, how many times have you driven down the road and not gotten into an accident? But every time you get into your car, you put your seatbelt on. Because the one time that you get into that accident is worth the inconvenience of putting your seatbelt on every day. And I know that from a fact because I was 18 years old when my brother, got broadsided in the intersection and I wasn't wearing my seatbelt and I was in the back seat. So I didn't think I needed to back then. This was, before everyone got very safe conscious.
Wow.
And ended up in the hatchback. But at the end of the day, it comes down to you don't want to be in the situation where you can't support costs and or compliance because the penalties for that can be severe if you run into that situation. And it's just like when you're not complying and something goes wrong, then the consequences of that are, again, are severe. I'll just leave it at that. I think that's probably the best way to.
Yeah, I'm connecting with your illustration. Point made. Yeah, on us as the prime to make sure we're getting what we need from them. And so then the what we need part, is there such a list, Ted, in your community website to those types of documents that, or maybe Derek, I haven't gotten through all of Derek's modules yet, but where would be a high level list of things we should minimally check on? Yeah.
So this type of answer, as Ted spoke about other things on this call, it's like, I hate to say it, but like, as I always say, every bid is different. The requirements for every job, every solicitation, a lot of that will be given, like, for example, if they're asking for certified payroll, I very often see that in solicitations when you're putting together your proposal response, so that it's not a surprise. And like I said, you primarily will see it with construction contracts, like, you are in that industry, Roberta, so it's a very pertinent question that you're asking, of course, but these should not be surprise type things. And the rule of forms, as we talk about, we don't go hunting for them. We abide by and follow what is provided to us. And then if we do have questions about something, because we know something could come up, we can ask contracting to help fill those gaps as well. But we can't be so, contracting can't put us in a position that would be so impossible for us to comply without being transparent, communicating with us at the solicitation level, at the start of work level, at all these levels going through. These should not be surprise gotcha things to lose sleep over. It's just, as you know, you need to provide them, you follow through and you provide them, and then everything's okay. And you're already very resourceful. So as those things come through, I know that you will rise to the occasion, although no, there's no substitute for doing things the first time and learning it. There's always that uncomfortable process. But don't let it be like a surprise type fear, because it should not become a surprise to you. And then the other piece for compliance that I just wanted to share, I won't tell the whole story, but I've shared a couple of times in this community, and I share a lot on YouTube, but DOL, Department of Labor, wage determinations, company that I used to work for, this is a great learning lesson why it's important to put the seatbelt on every time, because they thought that they could offer insurance or health and welfare. And I'm sure Ted and Evan, you guys already know the implications of how that's may not be so great. So once some of the employees on the contract found out what they were owed and started complaining to the DOL, after about 18 months of being staffed on the contract of over 75 people, you could imagine when we got the knock on the door from the DOL to look at the occupation codes and the wage determinations to see what the minimum we were paying our employees, along with the fringe benefits and everything that we were supposed to. And then when my boss said, oh, we thought it was an or thing, and the DOL said, no, it's an and. And by the way, now you have to pay back the 18 months of 75 employees missed compensation you were supposed to pay them, in addition to penalties. That's the car accident that you want to avoid. And a lot of companies bidding on these contracts, small GovCons, they get away without even knowing what a wage determination is, or knowing what the minimum amount or fringe that you should be building into your pricing. But one day they're probably going to get checked, or maybe they won't, but they could. And that's enough to keep all of us on the safer side of the fence. So that should that happen, just like Ted's example, that we are prepared and that we aren't taken out or worse. And again, that was the company that I worked for, experience that I wasn't directly involved in, but I got to sit in the cubicle and say, holy crap, what's going on over there, and learn from this stuff, because I was new, and I will never forget. So just another story to help drive the point home. Thank you for the question, Roberta. Really appreciate it. Yes, worst case scenario, absolutely. And yes, working with the core contracting officer, all those folks. Ted, really appreciate the answers to the questions here. I wanted to take a minute just to talk a little bit more about the community that you all have set up for our members. For anybody who's finding this pertinent, interesting, everybody should find it pertinent and interesting. But of course, everybody's at a different stage, but I think everybody can start putting things at the very earliest of stage in a row that makes sense for their further learning. So can we just talk a little bit more about what the community can offer? I know we're really getting off the ground and it's really exciting. So what does that look like? If you just want to take it away for a minute.
Yeah, sure. Thank you, Doug. So the community, first of all, the entry point to the community is into the training on really the accounting and financial systems, the DCA compliant accounting and financial systems, just giving all the basics.
And guys, that's the link I put in the chat. So what he's referring to, you do have that link. And on YouTube, that will be the link that's in the description. That's the entryway. Ted, go ahead.
Right. So from there, we decided this year to expand that to any government contractor that wants to join the community, to provide a place to come for we don't call them meetups, we call them mastermind sessions. And so we scheduled our first session actually for February 11th, and that's coming up again in the next week. So that mastermind session is going to be talking a little bit more about the Trump administration transition. We're going to go into a little more detail on that. That was supposed to be our first mastermind session for the year, but given all the turmoil in the first 10 days of the administration, we did a kind of an emergency session on Friday, and then that one is recorded and in the community. So we had started this process. We're going to be having monthly sessions there with a wide range of topics. And then we also have a Q&A feed where where people can come and ask questions, and we'll be responding to those questions and providing answers. And then again, that data knowledge base will grow over time. And so we'll also be posting additional resources in there. So we started to add additional resources. And then this free part of the community is just going to continue to grow and expand again over time. Now we have a client-based portion of the community as well. So for if you become a client at Rose, we have I would just say a paywall to get into the client side of it, and we have other resources there. We have we have more types of presentations in there. And then we also have what we call CFO office hours. And then we have routine abilities for you to meet with one of our CFOs, GovCon trained and expert, and to be able to talk about any topic, finance, tax, GovCon related, and and be able to interact routinely with one of our CFOs. And so that's in the paid version of the community, but the other version is really a place for anyone to come and just learn more about what's needed to be a compliant GovCon on the finance and accounting side. And just a little bit about our background. We've been in this really, this is our 30th year. We finished our 30th year in October. Been supporting government contractors. We're right outside Washington, D.C. We've been supporting government contractors for most of our existence. We have government contractors that have, come to us as, hey, I'm one or three people that are leaving a large company, and I think I'm going to win a contract next month. And we've had them grow and scale to
wow.
5 million, 10 million, 20 million. We've helped a lot of them exit sales. So we're really here for that full life cycle, from startup to exit for our clients. And so we support all those types of M&A activities. Sometimes we're helping clients acquire other companies on the finance and accounting side. And then, one of our largest clients right now, this past year did over 400 million with us, and they were a startup with us about 8 or 9 years ago. It really just 3 guys that wanted to win some contracts.
It's possible.
That's awesome.
It's not easy. Like a lot of people, when gurus out there, it's so easy. I did this. No, yeah, as you said, what did you say? It was almost 10 years that you worked with them. Yeah. But it is very possible. Absolutely. I think that's the big draw to the government contracting sector. If anybody has questions, feel free to ask me if you have any questions about Rose or anything like that. But also, my understanding is that they can also post questions inside the Rose community for anybody who wants to go over there. There's an opportunity to post in the feed there questions to Ted, Evan, anybody who's adminning that over there as well. And Ted, Evan, thank you guys so much for being here today. I think we all very much appreciate it.
Yeah.
Thank you, Derek.
Yep, my pleasure, and happy to hopefully we'll see all of you again, either here or in the other community as well.